Good morning, good afternoon, good day. Welcome to my weekend market recap, 23rd October 2021. I am Sagar Nandi, retired IT professional, swing trading stocks using the Q systems and techniques. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live stock and market analysis on my website sagarnandi.com, YouTube channel Trading Profitably, and Twitter handle Sagarnandi. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. These are the Q systems I use in my trading. They run on the underlying TradeStation and Metastock platforms. That was the last slide. Let's continue with a look at the global markets. First, a look at the Australian market, all ordinaries. In the weekly chart, price has gone up from the recent swing low after displaying a bull release signal, at which point the backdrop color changed from magenta bearish to yellow neutral. The more you observe these color changes, the more you will be ready to take the trades in a more timely manner. After neutral, the backdrop color changed to bullish cyan, and this week's candle color is also cyan bullish, though the shape is mixed. When price reversed from the swing low in the weekly chart, in the daily it displayed multiple bullish headwind possible reversal signals, and right at that point I pointed you out to these signals that meant that a up move was likely, and that indeed happened. Price went up after displaying the bullish headwind signals. What kind of instrument that we could use when we had the bullish headwind signals? The appropriate instrument could be selling verticals, short put verticals. Then we would not have to worry about being stopped out. Verticals don't need to have any stop order. Time decay would be in our favor. Short put vertical is a bullish trade, and as price went up, by now we would have covered the risk distance and profit could be booked. At the swing low, we had multiple bullish headwinds, reversal signals, and what do we have now? We have 3 indecision at the top, which is a bearish signal in last 4 days. 3 out of 4 days had indecision at the top, and the other day had indecision candle. So we will not like to buy at this point. If anything, if price can come down, we may look for shorting opportunities. All ordinaries itself, this index itself may not give a short setup, but if it comes down from here, then you may look for shortening opportunities in individual fundamentally weak stocks. What is the trend? If we are thinking of short-term trading as we discuss in these webinars, what is the trend? The downtrend that we had created by successive lower highs and lower lows, that downtrend was broken when price went above the trendline resistance. It was there at that time. Now the trendline resistance is broken. It is not appearing on the chart anymore. So the downtrend is broken. Is it in a uptrend now? No, that is not clear. We have a higher high. Now we will need price to pull back and go up again, giving a higher low to have a confirmed uptrend. So we don't have a downtrend now. We don't have a confirmed uptrend now. So we are in the area where trend may be changing. If it creates a higher low and goes up, we'll be happy to buy. If it, on the other hand, breaks below this trend line support, then we will be very happy to look for short setups in individual stocks. For short-term trading purposes, the trend is not clear now. It's neither uptrend nor downtrend. My preference will be to look for short trades if price comes down, because we have 3 out of last 4 days with bearish indecision at the top. What about topics? Japan's market. Japan's market also recovered from the swing low, went up, and it is looking worse than the Australian market, because we don't have only indecision at the top, we have bearish flow candle, and Friday's candle color is also bearish. For short-term trading purposes, we continue to have lower high and certainly lower low. So we are in a downtrend. We'll be happy to take short trades in the Japanese market now. And in fact, you could start to look for the short trades when we have the bearish flow candle in the daily chart that also gave us a go with flow short setup. So when the index gives go with flow trend following short setup, it is very likely that individual stocks will also give bearish setups. We could start taking those bearish trades from Thursday itself. For short-term trading, it is in a downtrend. China's CSI 300 index. Well, in spite of all the news coming out of China about energy, about Evergrande crisis, it's continuing to remain in a sideways range, as if all those news doesn't matter. And in fact, this is a good example of what we should do with the media news. We should do nothing, no harm keeping an eye on the news, but we will need to trade the actual price moves, and actual price move is saying that nothing is happening to the Chinese market. It did break out of the trendline resistance on Friday, but the candle shape is indecisive, so we would not consider the breakout to be successful. If next week price can go up though, I will like to buy, because the weekly chart has a nice support. We had several doji candles in last 5 days. We have 3 candles with lower tail in last 5 days, and the backdrop color is also bullish. We have trend line support in weekly. We have trend line support in daily also. Daily had trend line resistance. Inconclusive breakout on Friday. If it can continue to go up on Monday, Tuesday, then we may look for buy setups. That is how we study the market level charts and get ready with some trades. So looking at these charts, weekly daily charts of CSI 300, you could now do a top-down analysis for the Chinese market and look for potential buying opportunities. So you will be ready with a list of buying opportunities, and if market goes up, you will trigger them. Will you look for shorting opportunities using top down or bottom up or fundamental first technique. I would not do that because even if the index comes down, there are many trend line supports. So I am not in a hurry to look for short trades, but I will not mind creating a watch list of buy candidates looking at this say 300 charts. For short-term trading, we have to say the index is still in a sideways range. That may change next week if it continues to go up. Next, UK's Footsie index. This is another market that is continuing to remain in a sideways range. It is at the upper edge of the sideways range and it did display a bear release signal at the upper edge. So you could in fact take some short trades looking at this bear release at the upper edge of a sideways range. What kind of instrument would be appropriate? The instrument that would be more appropriate probably than others would be short call vertical. So time decay would be in our favor. Price did not go up. It might have come down little bit since the bear release signal, and the time decay would be in our favor. So if you took a short call vertical using the box short setup concept, then you would have small profit by the close of Friday. You could look for short setup in Footsie index itself, or as I prefer, you could look for short setup in weak industries and then further in weak fundamental stocks. Then you are aligning more forces, not just the market level force, and your probability of success would be higher. Footsie continuing to move sideways. And lastly, India's Nifty 50 continuing to remain the strongest of the global markets. And in fact, it is currently stronger than the, okay, it was, I think we may say that it is stronger than the USA market because it is going straight up. There is no lower high, lower low in the daily also. All higher high, higher low. This week it pulled back from Tuesday. On Monday we had an indecisive doji candle, and more importantly it displayed the bearish indecision at the top. And very next day, if you look down, it had a reversal candle at pendulum high. Reversal candle at pendulum high after displaying an indecision at the top, doji candle also. You could short India market from Tuesday itself. Not only the index or futures, you could short some stocks. Stock futures allow shorting in India. Stocks do not allow shorting, but stock futures allow shorting, and options are also tradable. You could take bearish trades looking at that, and you'd have a nice profit between Tuesday and Friday. Now I see the weekly is also displaying a bearish headwind possible reversal signal. If we look back, whatever period is covered in the screen, last time a bearish headwind came, price pulled back enough to give us a profitable swing short trade. The time before that, when a bearish headwind came, that also led to a pullback large enough to give profitable swing short trade. And prior to that, when we had the bearish headwind, it didn't lead to a pullback that might be profitable. Maybe the first one would lead to a profitable swing short trade, because our favorite instrument in those cases would be short call vertical. Time decay would be in our favor. So in 2 more weeks, price had gone down from this candle to this candle. Price has gone down, and time decay would be in our favor. So the first bearish headwind would still be profitable. The second bearish headwind would not be profitable. In any case, our trade signals are not based on the weekly chart. Why I went through the previous occurrences of bearish headwinds is to anticipate a possible down move. It may happen. Now, if I look at the daily chart, it has already pulled back somewhat from the swing high. So, Monday would not be the best day to short this kind of movement. India market in this case. Monday would not be the best day to short. Tuesday was already the best time to short. Now, you may look for shorting opportunities if price continues to come down on the index, but those would not be the lowest risk shorts. Now I am here still looking at the index. Some stocks or some industries might not have come down between Tuesday and Friday. They may be coming down next week. And if so, then using that industry rotation in your favor and weak fundamental stocks, you could look for shorting opportunities. That was a look at the global markets. What do we see? Australian market, the trend is not clear, it's changing. Japanese market, downtrend. UK and China markets are sideways. India market still in an uptrend. However, all the markets weakened in last couple of days, except two markets, the sideways markets. UK and China markets, they didn't weaken, they are in a sideways move. But Australia, Japan, India, all these three markets, they weakened this week, came down a little bit. Came down a little bit or stopped going up. So they weakened. Let's see what is the situation in the USA market. For that, let's use the market ETFs. Okay, DIA is here. Let's look at DIA first. DIA made a new all-time high on Friday. And the media is always publishing that. So media, CNBC website, for example, headline that Dow Jones made a new all-time high. It is true. Now, when a novice trader looks at that headline, they may be inclined to take long trades in DIA or industrials. However, Q traders would not do that. Q traders would have bought DIA on this day. That was previous weeks, not this week, previous week's Thursday, when we had a bullish flow candle that also gave a go with flow long trade setup. And the weekly was already bullish color at that time. So we could take a long trade Thursday 1 week ago, and now when price came to the watermark resistance displayed indecision at the top, we would happily book profit, at least partial profit. We would not take a long trade in DIA at this point, whatever the media may be saying. In fact, intraday yesterday, DIA created, or it seemed it could create a false upside breakout, but that didn't materialize. Price went up, but not enough to close with a bullish shape candle. Looking at the watermark in weekly, watermark in daily, the indecision at the top, I will be more inclined to take a short trade if price comes down from here, because the risk will be very small. Now still, DIA did make new all-time high on Friday. So what we may do, we may look at Q index, see the Dow Jones constituents, and try to find out if there is any buying opportunity there. Let me open Q index. I'll come back to Q index later. Let's look at the market level analysis first. But it is probably a good exercise to see that when the market is looking like this in terms of DIA, is that really a good time to buy trades? I didn't do an analysis of Dow Jones constituents, but we'll do it together. It is at the upper edge of a double top. So this is not a place where I would like to buy. If anything, I'd like to short if price comes down next week. SPY, that also created a similar indecision at the top, also at watermark resistance in both daily and weekly. During the day, it did create a reversal candle, however, price recovered. If the reversal candle remained, which would be at pendulum high, that would have created a false upside breakout. So that would be a very nice time to short SPY if the reversal candle was confirmed, but it was not confirmed. It went away as price recovered, but it still closed with indecision shaped candle, indecision at the top, bearish signal, and below the watermark resistance. Unlike Dia, it is little bit worse than Dia. Dia closed above the watermark resistance, but SPY closed below the watermark resistance. So if market goes down next week, SPY goes down, I will also be happy to take a short trade in SPY. Where was the buying opportunity for Q traders? It was again on Thursday, 1 week before, when it gave a bullish flow candle, or even before that, right at the swing low, just like we saw in the Australian market. After displaying the bullish headwinds, it recovered. So the headwinds are reversal signals. The instrument of choice would be short put vertical. On the other hand, when we have a trend following long trade setup, the instrument of choice could be many different things. You could use short put vertical, you could also use long call verticals, or certainly you could use the stock as well. When it is a trend following trade, I am more happy to take a long trade with the stocks than when it is a reversal trade. For reversal trades, I prefer to take short vertical so that time decay is in my favor. For trend following, you could do short put vertical, but you could also use long call verticals depending on how the reward risk graph looks on those verticals, and certainly you could use stocks. Again, for SPY, I will be more happy to short at this point. The buying opportunities were much earlier. Then IWM, small cap stocks. In fact, if you kept an eye on these trend line resistances, the watermark level, even this shorter term watermark level, on Thursday, using intraday fine-tune chart, you could take a short trade. Not a swing short trade because there was no Q short trade setup, but using intraday charts, you could take a short trade expecting that price would go back below the trend line resistance and also this watermark resistance, which happened. So you could take a short trade using fine-tune chart, and you would also be happy to take that because the trend line resistance was and is still there in weekly chart. Is there any swing short trade in IWM? No. Using daily chart, there is no short setup because trend line support is nearby, and for short-term trading purpose or even for longer-term trading purpose, IWM is continuing to move sideways and near trend line resistance in daily weekly. I will not buy, and in this case I will not short also because trend line support is there, but I will not buy at this point. Sideways. And take stock ETF QQQ Nasdaq 100. Here also the last buying opportunity was Thursday, 1 week ago. Then it recovered. The long trade gave a nice profit. It did not come close to the previous all-time high watermark resistance. SPY and DIA are therefore stronger than QQQ. On Friday, QQQ displayed a bear release signal, and in fact, during the day, it also created a reversal candle. If the reversal candle stayed at the close of the day, then you could look for short setups in tech stocks, QQQ constituents. But it did not confirm the reversal candle, which would have come at pendulum high, and also the daily candle shape is indecisive. Weekly candle also has an upper tail. Am I going to buy now? No, because my last entry opportunity was on this day, Thursday 1 week ago. That was a possible go through a long setup. After that, we have enough up move. The long trade taken as a go through long trade has covered the risk distance. We could book profit. And now we don't have a low risk buying point. We don't have any trade setup also. Am I going to short using the daily chart for QQQ? It will be difficult to short because there is a trend line support. Even on Monday, if on Monday price comes down, gives us a bearish color candle, red or magenta, we will have a trend line support very close to that. If so, I'm not going to short. However, let me clear the lines. If this trend line support is broken and price is not so close to the next trend line support, then somewhere here you could look for shorting opportunities. In QQQ, no, because by that time QQQ would be somewhat below the swing low, below the swing high, stop would be far away. But if the breakdown happens, instead of shorting QQQ, you could short individual constituent stocks. Right now, I will not take any trade in QQQ. That was a look at the market ETFs. Tech stocks are looking weaker. Dow Jones Industrials are looking stronger. IWM for many months moving sideways. SPY is also at double top like DIA. So we already had a bullish move for a week or so. Now there is no long trade setup, there is no short trade setup, but I am more inclined to take shorts if price comes down because the stop loss would be very narrow. And of course, instead of shorting the market ETFs, I'll be happy to look for weak industries and then weak fundamental stocks. So I have more and more forces in my trade's favor. I will look at Dow Jones Industrial Constituents, but before that, let's look at some more market level insight. From the market ETFs, we don't have any trade setup. Preferred trading direction so far I have is bearish direction next week, but no trade setup yet. I have to see how the market moves. Now let's look at the 1 month to 1 day. 1 month to 1 day sector industry stock advanced decline breadth. That is bullish. Now across all the periods, 1 month to 1 day, everything is bullish. That is a reflection of the market going up since Thursday 1 week ago. Now am I going to look for buy setups? No, I already looked for buy setups Thursday 1 week ago. Now if you see from longer period to shorter period, it is weakening gradually. So I will be again from this perspective also, I will be happy to look for short trades if Monday, Tuesday market goes down. Bullish, but market is at a swing high, double top for some market ETFs, and the secondary stock had been going up for quite long time. Now I will expect a pullback. However, I will not take a trade based on that expectation. I will wait for the setup to be confirmed on Q charts. Now let's look at the bucket analysis. Between Thursday and Friday, there was a little dip. 2% of the S&P 500 stocks dipped below mid-Bollinger Band. Though the sector stock industry stock advance decline, they were bullish, more bullish than bearish on Friday. In terms of bucket analysis, we have weakening of the market. Weakening relative to Thursday, however, 75% is pretty high on the bullish side. So we have to say bucket analysis is also bullish. And you can see from the solid line and the dotted lines how the bucket distribution profile changed from Thursday, the dashed line or dotted line, to Friday, the solid line. And you would notice that in the most extreme upper bucket, stocks above upper Bollinger Band, that percentage went up from 5% to 13%. Not more than 10% jump, so not an extreme level, but it went up, whereas stocks that were closer to the mid Bollinger Band, bucket 7, 8, 9, relative to Thursday, they came down. So some very strong stocks, they remained strong technically, or maybe went up even, but stocks that were still strong, meaning that were above upper Bollinger Band, somewhere between, sorry, not above, somewhere between mid Bollinger Band and upper Bollinger Band. In that area, we see that some weakening of the market. That is how you read the dash line and the solid line and figure out how the movement is happening. Overall, it is still bullish, just like we can see from the bucket analysis pie chart. We can also see from the histogram green charts, green bars. The green bars are bigger in area than the red bars, so it is bullish. There is no indication of weakness or bearishness from the bucket analysis. Let's look at Finder now. Technical breadth, balance between bears and bulls, first using weekly interval. This is not as bullish as we would expect looking at the all-time high in Dow Jones Industrials, and SPY is very close to all-time high. The weekly technical all signals 55% bullish, not as bullish as one would expect from the market being, especially SPY dia being at or near all-time high. Strength signals is actually bearish, trend continuation more bullish, reversals more bullish but balanced. Overall, it is still bullish but not as bullish as we would expect from the market ETFs. Still no sign of bearishness. We cannot say that there is any bearish sign in this technical breadth weekly interval. And if we see Friday's technical breadth daily interval, then we see that though sector industry stock advance decline was bullish in Q edge, Q finder's technical breadth was actually bearish. 57% bearish on Friday, trend continuation 67% bearish, reversal 60% bearish, strength signal 52% bullish, balanced you may say. So this is also a graph inside that is telling that we may look for shorting opportunities because Friday technically was bearish, and that is happening at double top in multiple market ETFs. So I will not mind looking for some short setups. Probably they may be reversal trade setups. We see 60% of reversal signals are bearish. We could also look for trend continuation short setups because we see 67% of trend continuation signals are bearish. We may get ready with them, and if the market comes down next week, we may execute those short trades. Right now, I'll not look for long trades because the market ETFs are extended to the upside. So far, my preference is still to take short trades, and let's see market breadth total view changes it or not. This is a study of market internals, first using broad exchanges Nasdaq and NYSE. The yellow line, percentage of stocks above 50 MA. It was going up last couple of days, it tilted down, but it is still in an uptrend. That is for Nasdaq. That percentage of stocks above 50 MA is around 41%. For NYSE, in the last webinar also, we saw NYSE was stronger than Nasdaq, and that is continuing. The percentage of stocks in NYSE above 50 MA is at 55% compared to 41 in Nasdaq, 55 in NYSE. So NYSE is much stronger. Also, NYSE is above the midpoint, 50% level. Both are in an uptrend though. Last couple of days, Thursday, Friday, it came down. That is also favoring a bearish trend if the market goes down next week. If we look at the 3-month new high low, Nasdaq, NYSE, none of them are near the extreme high level, so that is not helping us decide bearish trades. There is no signal from that. And if I look at the very useful market breadth total view that combines insights from the 2 exchanges and 4 major indices, here also the yellow line, percentage of stocks above 50 MA using total view, in an uptrend about 55% level bullish, above average line, above midpoint. So it is bullish. Last Thursday, Friday, it might have tilted down. It has tilted down a little bit, but it is still in an uptrend. We have no signal from there. The tilting down will favor taking a short trade just because the market ETFs are extended. Here also the 3-month new high low is not at an extreme yet. And at market high, I am looking for Hindenburg or distribution count, but I don't see any Hindenburg or distribution count at the right edge. The last accumulation distribution count was actually a bullish accumulation. That was the Thursday 1 week ago. That was the day you could start to buy stocks. Now price has gone up. Those buy trades has already hit the profit target probably, and now it is at a swing high, reasonably above the recent swing low. So we are not going to buy now. If anything, if market comes down, I'll look for a short setup. No bearish signal yet, but because it is extended, I am going to prefer taking short trades. What kind of stocks are in favor? Growth versus value, the magenta line. We don't know. It was in an uptrend. Now it is probably changing, but we'll have to see if it actually tilts down. For last couple of days, it's moving zigzag, zigzag, up, down, up, down. Growth versus value, performance indecisive in the last couple of days. On the other hand, small cap versus large cap, that is more clear. It is tilting down. So small cap is doing poorly. That is small cap versus large cap. Small cap is doing poorly compared to large cap. But if we look at mega cap is weaker. This is small cap versus large cap. If we, on the other hand, look at mega cap top 20, expand little bit. The relative performance line for mega cap top 20 is sharply tilting down. So mega caps are doing poorly. So we have large caps somewhere in the middle, small caps weaker than large caps, and mega caps are also weak. Now mega cap top 20 has this trend line support. We do have a bearish flow. However, the trend line support is still there. It is holding on Friday. If the support is broken, then we'll be more concerned about the mega caps. Currently, it is continuing to remain sideways inside the triangle pattern. If that trend line support is broken, then there may be more pain for the mega cap stocks. Mega caps neither bullish nor bearish inside a triangle. So I looked at market ETFs, looked at sector industry stock advanced decline breadth, looked at bucket analysis, looked at technical breadth. There is not enough bearish signal. There is not enough bullish signal, certainly. Why is my preference to take short trades next week? Only because those will be much lower risk trades, and I will execute the trades only if I see a confirmed Q 360 degrees trade setup. We may try to look for some short setups, but before that, as I promised, let's look at Dow Jones Industrials components and see, is there any buy setup from them when Dow Jones Industrials made a new all-time high on Friday. Q index got the constituent stocks, 31 constituent stocks. Now it is retrieving data from Refinitiv and calculating the scorecard. Okay, it is taking a while. I observed earlier also during my day, I am living in Thailand, during my daytime, the response from Refinitiv was slower than usual. No problem. While it is retrieving the constituent stocks data, let's go back to Q Finder. Let's see if we can shortly list some bearish candidates. So let's go to the bearish setups. Okay, let me go back to home. What I mentioned earlier, that trend continuation is reasonably bearish, 67% bearish. Reversal is also more than 60% or at 60% bearish. So we could look for reversal trades, reversal signals, reversal trades, sorry, reversal signals, which could be headwind reversal trade, box trade, or bounce trade, short setup. Also trend continuation more than 60% bearish, 67%. So we could look for trend continuation shorts that could be breakout, go with flow, pullback. Now when you look at all these graphs, which one has the biggest percentage? Breakout. So you could look for the other trade setups also. Headwind, 0.8% of all stocks have bearish headwind. 0.8% of all stocks have bearish box setup. But if you look at bearish breakouts, 5% of all stocks, and go with flow also almost 5%, 4.8%. So when you look at these graphs, firstly you look at the pie charts and decide your bearish or bullish view. That view would be bearish looking at the pie charts. Then you could look for any trade setup, but if you want to quickly look for trades, then you focus on the setups that have maximum percentage of possible setups. So that would be breakout and go with flow. with that in mind, let's go to breakouts first. 101 bearish breakouts. Because there are so many, let me also combine the breakouts with momentum signals. Those are breakouts, bearish breakouts, meaning break down below trendline support. And now I'm going to add momentum signals. No, I didn't want to have pocket pivot. Let me go back to bearish signals. I have 101 breakdowns. Let's go to the momentum signals again. Look for Mobo breakout also from a squeeze with a bearish kahuna. Now I am left with 12 stocks. Let's look at their technical signals now using Q Elite. I could use Q Global also. I use the systems interchangeably during webinars. Let's go through these stocks. AMC has a breakdown below one trend line support. However, there is another trend line support, so we are not going to short. Weekly also has trend line support. If we have trend line support in weekly or daily, any of those intervals, we are not going to take a swing short trade. AMC, no. ARNA, this has a better breakdown than AMC because all the trend lines are broken now. Two trend line supports were there, both are broken. And here weekly doesn't have trend line support. Instead, it is actually reversing from trend line resistance. And remember, when you saw the trend line resistance in weekly, and it looks like trend line resistance was there in the daily also, gave a bear release signal, you could get ready and short on this day itself using fine tune chart. In any case, that was then. Now it is giving a possible breakdown short setup, and as we looked for from finder with a Mobo breakout from a squeeze with a kahuna, on top of that bongo turned red, on top of that we have a PSAR reversal. So enough momentum signals coming out of squeeze with a breakdown. ARNA, so I will come back to ARNA because we will look at its fundamentals. Let's go through the other stocks quickly. BKU has a breakdown, however has a lower tail. I wouldn't short it on Friday at the close, but I see we have a nice breakdown in the weekly also with bearish color. The dollar symbol here is showing that after earnings it has a bearish shape, bearish color weekly candle. After earnings it very nicely broke down below trend line, support in daily also. And we have plenty of momentum signals. Mobo breakout from a squeeze with kahuna that we searched for. Then we also have a BGU, but in this case down, not Bible gap up, Bible gap down, and a pocket pivot that is bearish. We have bearish pressure. Enough momentum signals. Sorry, not bearish pressure, sorry, that is bearish flow. Bearish flow in the daily with very high bearish volume. So we have enough bearish signals to look for a short setup, not at Friday's close because it has a lower tail, but we could look for a short setup next week if it goes down. I will look at its fundamentals also. Let's look at next one. BLNK, Blink, has a breakdown but has another trend line support nearby. By looking at the size of the candle, our stop would be far away relative to the potential profit target. So I'm not going to short it now. Next one, DKNG, broke sharply below two trend line supports. However, there is another trend line support. Not going to short now. GNOG. This is looking very nice, very nice. Long consolidation with many candles with upper tail. So bears were always pushing price down. Some buyers were still there, but they gave up on Friday, gave up a lot because it has a very clear sharp breakdown below the trend line support with a bearish flow candle. And as we looked for from Finder, Mobo breakout from a squeeze with a Kahuna, biggest down move in 1 month. Bongo turned red. We already had PSA reversal some time ago. So we have a possible short setup in GNOG also. So let's keep GNOG. Next JMIA. This has one breakdown but another trend line support. So let's not short that, not look for shorting that. Next one MOD. One trend line broken, another nearby, not going to short. Next one NCTY. The weekly trend line support is there, not going to short. Next one NTGR. This has a nice breakdown also. From multiple trend line support breakdown with bearish color, bearish shape. Weekly is also bearish shape. Bongo turned red as we searched for Mobo breakout from a squeeze with a Kahuna. On top of that, a bearish pocket pivot, PSAR reversal. We also had ice hole failure 2 times in recent days. Ice hole failure, that is also a bearish signal. So NTGR is also giving a breakdown short setup. Keep that. Next OI has trend line support in both weekly daily nearby, not going to short, and ZDO. It has a breakdown, however, has a lower tail, still moving in a range, so it's not the best short setup. So we are left with several stocks: ARNA, BKU, GNOG, NTGR. Let's look at them. Look at their fundamentals. ARNA. I am entering the ticker symbol. TradeStation has ticker symbols and it is going to retrieve the definitive symbol first and carry out the analysis. ARNA, we already see fundamentals very weak. 3-star shorting candidate, overvalued stock with negative earnings growth. That's great. In fact, revenue is also zero, so very bearish. Let's look at its industry. This is biotech. Biotechs can go down on its own, can go up on its own, so I am okay to short ARNA. But still, let us look at the industry. We have all the systems. Industry, relatively it improved. Earlier it was magenta, now it is looking better than over 1 month period. Over today I see acceleration, and if I want to look at the percentage, it is up over last couple of days. However, biotechs can go down on its own. So ARNA, let's look at the chart again. ARNA is giving a possible short setup provided it can go down next week. Okay, next one, BKU. Let's see, we have a better short candidate than ARNA. Biotechs can certainly go up also, so some people may avoid trading biotechs or be cautious with them. BKU, fundamentally it is medium valuation, high earnings growth, so it is not a bearish fundamental stock. Regional banks, so let's not try to short it. We are trying to find out stocks where all the forces are aligned in our favor. Let's not think of shorting BKU, regional banks. Next one, GNOG. Casino and gaming, overvalued stock. No growth information. So we are happy to short this stock, steadily coming down. Let's look at its industry, casinos and gaming. Nice. Weak industry, and unlike biotech, it doesn't have that unpredictability because of certain drug related news. Casinos and gaming, among the worst 20% industries over 5 day, 2 day, 1 day, has deceleration over 5 day, and this stock is overvalued. So let's look at the chart again. GNOG. This has a very clear breakdown. So between ARNA, which is a biotech, and GNOG, I would prefer to short GNOG. And in fact, if you looked at the stock using intraday fine tune chart on Friday when it was going below 17.2, that was the level where it broke below trend line support, you could short it. But we have one more stock. Let's look at that, NTGR. Let's look at its fundamentals. This exercise is also useful because I am demonstrating how you have a large list of stocks, all liquid stocks. That's what I started with in Q Finder. Looked for bearish trades based on the daily insight, the overall pie charts, and the individual trade setups, which ones were having larger number of candidate trades. Then I looked for breakdown, further added momentum signals, looked at fundamental, technical. Okay, Netgear, fundamentally it is quite strong, undervalued, plus has reasonable earnings growth. Actually earnings growth is there for 3 year 3 quarter. However, shorting fundamentally strong stocks is okay for short-term trading if we have industry weakness and technical short setup. Let's look at the industry. Netgear, communications equipment. This is very weak industry, so that allows me to short. Let's look at Netgear again. Netgear, okay. So we are left with two possible candidates. One is this Netgear, has a breakdown. Weekly is still yellow. And then GNOG, weekly and daily, both are very bearish in every way. Also fundamentally GNOG is very weak, NTGR is not, so we could finally shortlist GNOG as a short candidate. If I was not talking, I could locate this trade setup in a couple of minutes. And using intraday fine-tune chart, remember the daily support was at 1720. So when it was going below that support after breaking the early range low, so in fact you could place a stop short order below this candle which broke below early range low. It had a lower tail, so you could put a stop short order below the low of that candle, which would also be below the daily trend line support. So you would be able to short it right when it was breaking below the trend line support. You would have a significant profit by the close of the day. How much? Relative to risk, this would be the risk, much bigger profit related to the risk. So you could initiate the trade during the day itself. You could find it from Finder, or if I put GNOG in Q sonar, you would notice many more signals now. Let's see. Breakdown, touching trend line resistance, has a bearish pressure U-turn, significant down move close to close, Mobo breakout from a squeeze with a kahuna. All bearish direction, relative performance also bearish. So you could identify it in real time using either Finder or sonar, and in fact you could take the short trade. It is also a valid short trade to consider next week, especially if the market is weak on Monday. This one, GNOG, technically weak, fundamentally weak, industry weak, and as I mentioned, my preferred market direction is now, preferred trading direction for next week is bearish. Having said that, let's go back to Dow Jones Industrials components. Let's see what the media is implying, that Dow Jones made a new all-time high. That is a fact, but does it mean we have buy setups? Firstly, I look at the advanced decline. Friday was mixed, balanced. We can't say it was bullish. 2-day period, 58% bearish. 5-day was bullish. Let's look at the constituent stocks. Let's look at the stocks that went up most. So here I am not looking at fundamentals yet. Let's just look at the stocks that went up by, let's say more than 0.3%. These are the stocks. Let's focus on them. Let's look at their technical signals from Finder. I can see one possible go with flow long setup. In fact, only one stock, Goldman Sachs, has a Q long trade setup. Let's look at Goldman Sachs, GS. In fact, why don't I use Q Global also? Goldman Sachs, the chart is similar to that of Dia. I think this is Thursday 1 week ago. That time you could take a long trade because it very nicely bounced up from trend line supports. These supports, memory trend line supports, work very well. Looking at the bullishness of the market on that day, Thursday 1 week ago, and this bullish candle going up from trend line, you could buy at that time. Now it is near watermark resistance. It is already significantly above recent swing low. It had a bearish headwind at the same current price level earlier, from where price could go down. So this is not a place to consider buying Goldman Sachs. So yes, Dow Jones Industrials did make new all-time high. However, as far as Q trade setups are concerned, of all the stocks, what did we do? We looked at all Dow component stocks that went up by at least 0.3%. with one click we could look up their technical setups. Only one stock had a possible setup, but that is also not giving a proper reward risk trade setup because it is near the upper edge of a sideways range. Now if we wanted to look at the other few stocks, let's look at them. Let's go back to these stocks, open all the other stocks, not Goldman Sachs. So let's avoid Goldman, sorry. Open them in Q Global. I'll go through them quickly. American Express, AXP, at upper boundary. So I'm not going to buy it now, overbought. Also the candle shape is indecisive. Home Depot, well above upper boundary. The time to buy would be at this point. That was a go with flow long trade setup, swing low. By now we would have booked profit in that trade. Now it is well above upper boundary, overbought for many days. Not going to buy now. Visa, no trade setup, moving sideways. V for Visa. Nike, already far above recent swing low, above upper boundary. Overbought, not going to buy. Chevron, well above recent swing low, above upper boundary, not going to buy. In fact, I shared a PR stop of Chevron earlier, ExxonMobil, that worked very well. We may look at that, but let's go through these stocks first. CVX, cannot buy now, overbought. CRM, also near upper boundary, overbought, not going to buy. Walmart, above upper boundary, well above recent swing low, indecision shape candle, not going to buy. Procter and Gamble, this is looking better. It has a trend line support, multiple trend line supports at the lower edge of a sideways range. Bull release signal, candle color reversed, not reversed, changed from red to yellow. It could be a bounce trade setup if we had very high volume or pressure on Friday. That was not there. So this could still be a possible buy setup, and because it is a reversal trade setup, one could use short put vertical. I am keeping Procter and Gamble. I look at it using 3 chart template. JP Morgan, very close to upper boundary, well above swing low, not going to buy. Extended. TRV, near upper boundary, well above swing low, extended, not going to buy. UNH, well above upper boundary, not going to chase a stock like that. So we are left with Procter and Gamble, defensive stock. Let's look at it using 3 chart template. This is looking better. Weekly trend line support, daily sideways range, lower edge with bull release signal. Inside a Q squeeze, defensive stock. So we may consider taking a long position. We could actually take a long position probably on Friday. No setup because we didn't have the required checklist conditions, that is neither bullish pressure nor heavy bullish volume. But still, let's look at its fundamentals. Let's go back to index, Procter and Gamble. Well, fundamentals are not great. Let's look at it using Q Vital. We could read it out from the table, but using Q Vital is also possible. We want to look at the single page fundamental view. Fundamentally not strong. overvalued stock with negative earnings growth. Now, if you at all wanted to buy stocks in a weak market, probably Procter and Gamble is a good candidate for that. Defensive sector, consumer staples. Why don't we look at its industry? Consumer staples was weak for a long time. Household products industry, let's check that out. Yes, household products industry improved a lot. Earlier it was very weak. Over 2 day and 1 day periods, it is actually one of the top 20%. That's why we have this bold case and checkered background. It also has acceleration. Industry is looking good, and if we wanted to look at the sector, not required, but I had a feeling sector would also be turning around relative score wise. If I look at the industry percentage, it is also actually going up over last 2 days with acceleration. So Procter and Gamble is the closest stock we could consider buying, a stock closest to considering buying from Dow Jones Industrials. That's a defensive sector steady stock. So that was one stock. So why I carried out this exercise is for the novice traders to show that looking at the headline in CNBC, other places, one may be tempted to buy Dow Jones Industrial components, but the time to buy those stocks, most of them were several days or maybe 2 weeks ago, not now. Except only one, that is a defensive sector stock, Procter and Gamble. No Q trade setup, but that is the one closest to giving a low risk trade setup using Q technique. On the other hand, on the short side, it was much easier to find shorting opportunity in GNOG. And if you went through the go with flow short setups, you relaxed some of the criteria like the momentum signals. I put a lot of criteria, but those are not required criteria. I don't need the momentum signals to take a breakout setup or go with flow setup. If we didn't focus on momentum signals, we would have probably many more than GNOG as possible shorting candidate. I am more inclined to short next week. GNOG is a candidate. I may shortlist a few more and get ready and trigger the trades if the market goes down. If the market goes up, it is already extended. I am not in a hurry to buy stocks now. That is all for today's session. Thanks a lot for attending. I look forward to seeing you in my next session, which will be next weekend. I am not conducting the Wednesdays webinars nowadays because I am busy with the master class trainings. So our next public webinar will be next weekend. Thanks a lot once again. And as always, no reason not to do that. Trade profitably.